So the first video of the course went over the types of trading that you can do, um, terminology in trading, and this video is going to go through technical analysis and fundamental analysis. So what is technical analysis? It's studying price action on a chart to inform your trade decisions. We use historic data to understand where price could go and basically look at the trend and inform ourselves of whether we're going to go long or short on a trade, and overall just allow us to get a precise entry point and understand where we're wrong on the trade and where to take profit on the trade. So there's hundreds of strategies and indicators that you could go through. It'd take you a long time to go through all the technical analysis concepts, but some are better than others. A lot are pretty pointless and don't really give you a accurate idea of how to take trades. So it's important to understand the basics, which is candlesticks, market trends, and then start to progress into things like market structure. So why do we use it? We want to map out the possibilities of where price could go next. And I say possibilities because we're working with probabilities in the market. We don't know where price is going to go. But by using technical analysis and having a good understanding of it, we can understand how likely it is that price is going to go to a certain place. And the goal is not to predict every single move of the market, it's to be profitable over time. That's where risk management comes in. So you could learn everything about technical analysis and have a really good understanding of it. But if you're not managing your risk, you're not going to be profitable, because traders, every single trader, every single trading strategy is not correct 100% of the time. But as long as you manage risk and you understand your strategy, you will be profitable. So there is a common misconception that technical analysis is complicated, and at first it can be a bit tricky to get your head around, but hopefully by going through candlesticks, market trends, and progressing logically, it will help it go in a lot easier. At first it takes work and you're going to have to be on the charts and just getting that experience in, but the concepts will become quite simple. And again, there's not an awful lot that you need to learn. In terms of, you don't need to understand loads of indicators. As I said before, learn the basics and then start to progress into some more complex stuff. So fundamental analysis. With fundamental analysis, we're using economic data or news events and overall qualitative information that will inform our trade decisions. So some examples of fundamental analysis is, you think that a crypto project has a good product that has some real world value. So there was a project that I've been looking at, Zig. They're bringing out a debit card which allows people to transfer crypto into fiat currency, so pound or dollars, and it basically just works like a normal debit card. You can use it on your phone, on Apple Pay, and that's quite a good product that could give that particular project some real world value and will inform investment decisions. Or in terms of stocks, a company has a good earnings report, or they're bringing out some new technology that should have a positive effect on the price of the stock. So therefore, investors go and buy the stock. But some drawbacks of fundamental analysis is that, one, it doesn't tell you where to get in and out of trades. And a lot of the time, the information is already priced in on the charts, which means that before this event or news release has happened, the charts have already told you where price is going to go. And just coming back to the point of getting in and out of trades, with technical analysis, you can clearly map out where you're going to enter a trade, where your stop loss is on a trade, and where you want to take profit on a trade. But if you're just using fundamental analysis by itself, you're not going to be able to have an accurate idea of where you want to enter trades. And also it might lead to you overthinking trades. So this happened to me when I started trading Forex. I had my technicals locked in, but when I started thinking about potential news releases, it swayed my decision making a little bit. And then I wouldn't take a trade, but once the news came out, the trade that I was taking went perfectly. But I was overthinking the news. So overall, you don't want to solely focus on the fundamentals. You can use it as a confluence alongside your technical analysis, but technical analysis should be your main focus because it's going to give you an accurate idea of where you want to get in and out of your trades.